All right. We are live with another episode of the Real Estate Investing Club. Today we have Todd Silance with us from Summit Capital. Todd has both experience as a small business owner and a real estate investor with over 8 million and 80 units under management. I am super excited to have this. We can go into a whole bunch of things, especially transitioning from the corporate life to an investor, which it's my story too. A lot of people out there, you guys are in corporate thinking about making that jump. This is the episode to listen to. So Todd, thank you very much for hopping on the show.
Absolutely, Gabe. Looking forward to being here and talking some real estate. And like you said, transitioning from a W-2.
All right. I told you before we got on here, we like stories. We like to hear how people got to where they are today. We already dived a little bit into yours, but why don't you take us to the beginning? How'd you get started in real estate?
Yeah, absolutely. I think like probably a lot of people, real estate, I ended up here now, but it wasn't where I started. And as you previously mentioned, I kind of followed the traditional route of go to school, come out of school, get a W-2, get a job. And my mindset was, hey, I'm going to work for the next 30, 40 years and eventually retire. And pretty quickly into that, realized, you know what, I think I need to speed that up and not, I'm not going to be able to, or I'm not going to want to continue to work for the next 30 years. And kind of looked at different ways that I could maybe transition out of my corporate job. And eventually, when I got married, my wife and I decided that we wanted to open a business. Real estate still wasn't on the horizon as something that that I would like to get into or invest in. So we decided and we opened up a business and we bought a franchise, an Anytime Fitness
Oh, cool.
franchise.
Oh, nice.
Yeah, I don't know if you're familiar with them, the 24-hour gyms, but we love it. And we opened our first one back in 2008, which, if you remember that time of kind
Good
of
time to buy.
exactly, right? 2008, let's open his business. Everything's crashing around us. Hey, it'll work out. But I think being young and naive and like in my mid 20s, that really helped because it was, oh, whatever, if we fail, we fail. Let's just keep plowing forward. And that's what we did. Now, I will say during this time period, we were still working our W-2 corporate job. So we opened a
Oh,
small
wow.
business, yeah, bought a franchise, and I stayed working. I was working for Nationwide Insurance, and I was a claim rep for Nationwide Insurance, and we're opening this business. Kind of, nowadays people are like, hey, what's your side hustle, on top to get out of your W-2 job? Well, for us, it was get another job. We opened that business and we were working in it, working our corporate jobs and trying to grow this business. And luckily it did pay off. A lot of hard work there. The business became successful, ended up bought another location, and my wife eventually left her corporate job to kind of run our fitness business. I stayed though for many more years in the corporate world. I was staying in the insurance industry, eventually became a consultant doing some learning and performance. So I was traveling, teaching a lot of seminars and training in the insurance world. And I was doing that and I liked it. I liked the people I worked with. I really loved it. But eventually it became where the travel was starting to take a toll. I was
Mm.
at this point in time, we had a young family and it was just pulling me away from the family. It was kind of pulling me away from the time to be around them, to coach, sporting, their sports teams, just to be home, things like that, that I enjoy doing, traveling, etc. So that's kind of when I started to look at real estate. And I will say real estate was always something, investing in real estate, that I was interested in. I just didn't know how to do it. And through meeting other business owners and meeting other insurance professionals, a lot of like insurance brokers that owned their own buildings and then they had rental units. I met a lot of small business owners through the fitness world that owned franchises. And the most successful ones all not only own their business and multiple franchise units across the country, but they invested in real estate. And they either owned the building, they would always tell me like, hey, own the building you put your business in,
Mm.
and or own the shopping center, own some rental units, etc. And that was actually what introduced me to syndications, because I was like, I've never heard of what is a syndication investment. And they're like, it's the greatest thing. Like you invest in real estate, but you're not doing anything. You're putting your money in, you're a passive investor. Because I just thought, if I want to be in real estate, I'm going to have to go buy some single family homes and get some
Yeah.
rentals.
That's what
right?
everybody thinks is like real estate. I have to buy a house. There's
Yeah.
so many different ways to do it, but yeah, keep going. I don't want to
And
jump
no,
in there.
that's exactly what I thought. And so that kind of me, changed my mindset a little bit on a way that I could pull back from my corporate life because we have a business that's successful and we love it and it's a growing business and it allows us some financial freedom. But now my time freedom was being eaten up by the corporate job out there. And again, I really liked it and loved what I was doing, but my why was always my family. So that kind of brought me back to why I wanted to transition into real estate. And that's what I started doing back in 2019. So that was my first. I started though, what you just said, I started buying single family properties. And then I
Yep,
realized pretty quick, like, hey, to scale and make some money that, my goal was to replace any of my salary. I'm going to need to get more units. And that kind of led to let's go bigger and let's go bigger. And then eventually get some larger apartment buildings and then turned into a business, turned
yep.
into, as I started getting investors and people starting to invest with me, I was like, wait a minute, I found a great business partner. Why don't we just do this where we can raise more money and help other people out there invest in real estate and we can try to get some apartment buildings. And
Nice,
now it's
man.
2023, and I left my corporate job a couple years ago and have been full-time in real estate for the last few years.
Very cool, man. I love it. That is a great story, and I feel like it's a trajectory that a lot of people can resonate with because so many are, they're working their W-2 job, and again, just like you said, I W-2 jobs are great. So many times I feel like I'm speaking negatively about them, but they are. I liked my job; it was fun. It just didn't give me the type of life that I wanted to live. It sounds like you liked yours as well, and it fits with a lot of people. So I'm not meaning to rag on W-2, but if you do want to have that financial freedom, businesses, real estate is the way to go. I like that you started with your franchise and then you went to real estate because I feel like you have a really good perspective. I've never run a franchise or bought a franchise. I looked into them, thought about it for a second, but I've always been interested to compare the two. If you go back to yourself, who was just working the W-2 and considering, buying that franchise, now with the knowledge that you have about real estate, how would you, coach yourself back then? Would you suggest that you go the franchise route for that active business income, or would you suggest to go right into real estate, building syndications, that kind of stuff?
Yeah, that's a great question, and I get that a lot, and sometimes I have talked about it in the past. There, for me, I would never say, I would change, how I did it and what we went through got me to where I'm in today. So it's hard to say, hey, I would do
Yeah,
something
yeah.
different and jump into real estate. But for somebody else, it's really going to look at what are they trying to get out of it, right? With buying a business or a franchise, the reason we ended up going into a franchise, and I translated into real estate how we operate our real estate business and how it kind of grew into a business. I was a person of like, hey, when I want to start my own business, or I think that's a way that we can make some income, get some freedom of time. The reason we chose a franchise was because I was buying a proven concept. I was
Mm,
buying a system that was
hmm.
already in place, that all I needed to do then is put in my operations and operate the system. If I just opened my own fitness gym, well, I got to figure it all out. But you're buying, and there's the pros and cons. So buying a franchise, whether it's Dunkin' Donuts, McDonald's, etc., right? Branding is what branding is. You can't control logo. You have to buy inventory from this, and you have to sell it for certain prices. The same goes for when we opened an Anytime Fitness franchise. But that we thought was the best way that was going to make us successful, because instead of me figuring out, these guys already have a proven concept. They have hundreds of units across the country that are making money. And if I put it in a good market, so it kind of translates to real estate, you look at the market, look at location, where should you be, and then you look at competition, comp and rent. Well, what is the other gym, what's the market looking like in there? And that's what we did. Okay, what are the other gyms charging? What are the amenities and things that are lacking and people want? And when we opened our first one, it was, this is a 24-hour gym. And the reason we looked at it, we were going to a gym that was closed at 9 p.m. at night, and on the weekends it opened at noon. And I was like, this is ridiculous. I can't go to the gym before noon on a Saturday or Sunday. So when we kind of got into this concept, I was like, wait a minute, here's something we can bring to the market that people can go 24/7. And same with as we transition in the real estate, when we're looking, same deal. We start looking at buildings. Okay, what are underperforming assets? What are the markets? What are the rents, et cetera? So it translated from my background as we started operating a business. When I started getting into real estate, it was a nice transition. So back to your original question, if someone really asked me, I said, hey, for me, I think it helped me prepare to get into real estate and then grow it into maybe doing a syndication or some larger joint venture deals, because I had that experience. Plus, organization of systems, like how we operate now, from marketing, lead generation, all those kind of things with real estate, and having systems in place. That's how it was with a franchise. And I loved that. It just keeps you organized. It keeps you on track versus me trying to figure it out myself. I'm a big fan of it. Like I know people kind of sometimes aren't fans of franchises, but I think it's going to be to the individual and how they operate. And for us, it worked out well, and it's helped us now as we move into the real estate world.
Yeah, absolutely. And we all always talk about real estate as an investment, but it is a business. It doesn't matter what what way you look at it. Real estate is another type of business. And so when you come into it with the expertise of systems, getting operational decks together, and getting or building your team, all those steps that you have to take to get your Anytime Fitness up and running, um, that is easily translatable over to real estate. I almost said Planet Fitness because, man, I that is the
Yeah.
one business model, the one franchise, those really low cost, open 24-hour a day fitness businesses where they only charge $10 a month, and I'm always like, man, I'm surprised that works, but it does. They're everywhere, and I'm just surprised with that franchise
we,
model.
we could we could talk offline about them, because I'm not going to poo-poo other franchises here on your call. But yeah, they have a model and it works, and there's a reason why the model works. But I love, again, that's my other passion. So you want to talk like fitness business and like franchises, I'll talk to you all day long. On top of real estate, I just think it's a cool, a really cool venture as well.
Nice. I love it. All right, but let's talk a little bit more about real
Yeah.
estate. You chose multifamily, it sounds like, was your main bread and butter there. Why did you choose, once you decided to go into the syndication space,
Yeah.
why did you choose to go down that route? Did you look at other types of assets? Because you're coming from a fitness center background. I'm surprised you didn't look at commercial, at strip centers, at stuff like that. So why did you choose multifamily?
Yeah, well, it's a great question. We did. I looked at it, and to be honest, I personally own, well, not a strip center, but I personally own like a medical office building, like a triple net
Oh, okay.
medical office building. So, and we looked at other assets like self storage. And I think for me, really what happened was, because when I first got started, it was single family homes. And then it gradually went to a triplex. Then it was a
Mm,
6 unit, then it was 13 units, et cetera. So it was just kind of like the snowball effect of, I probably, if I would have got into maybe some other assets, that's where I would have went. But as I gradually got to understand and know multifamily, my focus went into it. And that's also where I really like that asset class, because economies of scale there. But when we started learning more and more about syndications, because I first started getting in the world of syndication as a passive investor. So I
mm,
invested in
mhm,
multiple as an LP on the LP side before we jumped in and did larger, like a JV or a GP kind of deal where it was a little bit bigger. And that's only been recent. And really what kind of got me to there too was, as I started getting larger and larger deals, it was raising capital. And a lot of it
mm,
was, the first round, the first couple of deals, it's friends and family. But then what happened is, through the network of small business owners, whether it's in the Anytime Fitness franchise space, a lot of those owners, and you said you looked into it or you were doing a W-2, they love what they do. So they put everything into their business, and they're really not planning for retirement, or they're not looking ahead for investments. Or what they know, when I would talk to a lot of owners at the annual conferences and fitness conferences, was, yeah, I opened like a self-directed 401k. It just goes in the market, but they're investing it in the market. Like they'll just buy stocks and mutual funds. And then we talk about real estate, and they're all like, yeah, but I own like Anytime Fitness locations, or people, I got 30 locations, 30 units out there. I don't have time to be a landlord. I don't want to, own a small apartment building and deal with the headaches. And that's what kind of really was able to kind of springboard us in getting investors and raising capital, was, why not provide them opportunities to invest in real estate, get the benefits of real estate from the tax benefits and passive cash flow, some equity in a deal, but you guys don't have to do anything. Like we'll handle it for you. Just provide your capital, and then you go run your gym, go run your business, go run your doctor's office, etc. And that kind of has now led to some of the larger deals or co-GPing on deals to bring in investors, where we provide that opportunity for business owners to come and invest in real estate, but they don't have to go buy a single family home, or they don't have to buy a small multi
Very cool.
with that. So
Yeah, I love it. I just looked at the clock. It looks like we are running it down, but I do want to
yeah,
ask one last question because you
absolutely.
touched on raising capital there. Usually, the first obstacle that new investors run into is finding the deal. Once they get over that first deal, they find the deal, they execute on it, usually with their own money or friends or family or something like that. The next obstacle people run into is getting the capital for larger deals. And that's a pretty hard one to overcome when you don't have a framework to work with. So, what is the framework that you guys kind of use to go out there and get new capital for deals?
Yeah, with us, like I said, it kind of the network that I'm in, or that we work in, is that on my side of the business with the capital raising is going to be those small business owners.
Mm,
And how we get that is through education. I'm in a lot, for me, it's a lot of peer groups, business peer groups I'm in. I run one with Anytime Fitness. We have groups there. And then a lot of it would be through the meetups, like local meetups with that,
mm.
where it's education, teaching them, or I only say teaching, just providing some knowledge on how they can invest. And then what works really well for me is being relatable in the fact that, hey, we still own, like I still am a business owner, a franchise owner. I know what you're going through, from the staffing, whether it's staffing issues or trying to increase personal training sales in your clubs, etc. We deal with that all the time. We still have business meetings, and like we're running clubs. So becoming relatable to them, where they're like, oh, okay, but you're also investing in real estate. That's allowed me to kind of break those barriers down a little bit, where now that trust was built. When
Yep.
we do have a deal, we can send it out. And I have a nice handful of some business owners. Great. I've been looking to invest. It's end of Q1 here coming up. We have some business profits. I need to go ahead and invest it. And if we have a deal, that allows us an opportunity to really capture those investors.
Yeah. Yeah. And I think that the same steps you guys are taking can be taken by pretty much anybody in any field. If you're a firefighter, if you're a police officer, if you're a nurse, any field that you work in, you're all the time, you're interacting with people that are in that same field and you have that connection. So if you're also investing in real estate, you can be that bridge between the people who don't know about real estate, don't know about the benefits of investing in real
Yeah.
estate. You can bring that knowledge to them, bring deals to them, give them the opportunity to take part in the financial benefits of investing in real estate. So love to hear that. I am going to move us on to the quick question round, though. It looks like we have run down the clock. So you ready to rock?
Yeah, let's go.
Let's do it. Starts with education. Give me two recommendations, one for general life wisdom and one for real estate specific.
Real estate specific, probably one of the first, well, not the first real estate book, but one of the first ones I read was Raising Private Capital from Matt
Oh yeah.
Fairclough. I really like that book. So that transitioned me on how to like even attack friends and family from, okay, I'm using my own money, trying to come up with ways to buy after I used my cash to buy some single family and some small multis. That was the book that kind of switched my mindset on, oh, wait a minute, I can use my network and whether it's through insurance, I was still working at W-2, or owning a fitness franchise, that's the network I can go attack. So that helped me in the capital raising, and actually work to get one of my smaller deals, but to bring in some private capital. And then non-real estate book I would recommend is Who Not How by
Mm.
Dan Sullivan and Ben Hardy. Just, I think, great book. That one like changed my mindset on, I was a guy like, I got to figure everything, I got to be in it, and that like 10x our business, our fitness business, when we got the right people in there, the right people to manage the different stuff and let them do it because they're experts. And I'm good at just, let me sit at the 10,000 foot level up here and handle that. So that is an awesome book that I just reread it last year again, or a couple months ago.
Nice. Yeah, that is a good book. I read that a while ago, but it's definitely worth a reread because it is it's very important, regardless of what business you're trying to run here.
Yeah.
So moving us on to the next question. This is for your younger self. Let's go
Mhm.
back to the Todd who was just considering buying that franchise way back when. Go to him, look him in the eye, give him one piece of advice moving forward.
I would say is don't fall into the comparison trap,
Mm,
especially in real estate. You get into these rooms and you're talking to people and you're going, well, I should be there. Why am I not there? Same with 15 years ago, 16 years ago now when I opened the first franchise, it was, well, my business should be more successful. Don't compare yourself. Just you're already further ahead than you were before. And you probably heard that term like persistent. You just keep being persistent as you're moving forward and or persistent patience, excuse me. And just every day be persistent at trying to work towards your goal, but be understanding that you have to be patient, that it's going to take time because that goal or where you want to be will take time. But if you take that time and you understand that, hey, I will work towards it every day, you'll eventually achieve it because time will pass no matter what. You might as well start and just keep slowly trying to achieve that goal. But that
nice.
would be the biggest advice I would tell myself.
Yeah, absolutely. That would be good advice from my younger self as well. Patience is really hard, especially when you're young and you don't see progress when you're taking those little steps every single
Yeah.
day. But if you look back a year from now, you'll see the progress and you'll be thankful you did it. But you're right. It is really hard not to, when you're going into these rooms, networking with other investors.
Yeah.
This guy says he has 3,000 units under management. You're like, damn, dude, how could I ever get there? Well, he's been doing it for 20 years. And so if you keep taking those steps every single day, eventually you'll get there. Moving us on to the next one. And this is a good question for you because you run your business and you're in real estate. It's about the positions in our businesses. We all run our businesses based on the people that work with us. So what are the first three positions you hired for your business? And would you do it differently if you started today?
Yeah, I mean, for if we're talking real estate specific, I looked at what are my strengths and what are the areas that I know again the who not hows of I'm not good at. And that's when I found my business partner now for real estate, right? My strength is networking. My strength is like if you want to say the acquisition side and capital raise. So for us, it was marketing. We needed to find a person or software for marketing. We wanted to hire the underwriting. I needed someone who's going to be analytical, more with my business partner being really good with due diligence. So those were positions we said, or I identified as like, that's not what I'm good at. That's not really what I want to do, but I can excel at these other, from acquisitions and capital raising because networking is just what I love to do. So I'll do that. But let me find the partners, the technology that can operate the other side of the business. And that's how I focused when I transitioned into real estate.
Yep, that makes sense. You look at your strengths and then fill in the holes rather than working on your weaknesses, which is always good, but rather than, you know, trying to fill that role in your business, you hire for that role and then you focus in on your strengths. Good way to run.
Sure.
And I'm going to move us on to the next one. This is, I already lost my spot. I do this every single time. There we go. United States. It's a big spot. It's a big
Right.
place, a lot of square miles out there. Give me one metro you're most excited about investing in today.
Right now, I would say that we're excited to invest in would be Columbus, Ohio. I'm
Okay.
really high on that market. And I think a little bit, that might not be the market everyone right now is wanting to gravitate. I know it's the Southwest, the Southeast getting down there, or the um, but for me, I think a little bit because of my insurance background. I know there's been a ton of growth in that market. That's where a lot of insurance companies' corporate headquarters are. Nationwide Insurance is out there. And I experienced the growth over the last 10 years, and there's still the population growth going on just in Columbus. A lot of technology in there. So it is a market we're actively exploring and have been trying to pursue some acquisitions in.
Nice. Yeah, Columbus is a really solid market. We just bought one in Indianapolis. I know it's not
Yeah,
Columbus, but it's close and it's
right there.
another strong market, Midwest, mid United States market. I feel like those ones are great, especially when you're talking about cash flow.
Yeah.
You're not going to have the crazy cap rates that you see in San Francisco, Seattle, Austin, things like that. So
And it's a fun
good.
town. I don't know if you've ever been there, but it's a cool little downtown area too.
Yeah, I am not. I've not been to Columbus, but you not the first person to say that. I've heard good things. Moving us on, and this is mentors. None of us are islands. We all stand on the shoulders of giants. So, who is One mentor who has contributed significantly to your career today.
Yeah, I mean, there's been a lot. You're right, right? There isn't one. You don't do it on yourself. And I would think, for me, there's been a lot in every phase. But one that really stands out, to be honest, is back to my W-2 job. And in that world, on how to be a leader, how to be kind of, it was as I started getting into management and really managing people, it helped in our small business. It would help as it translated into real estate. And it was her outlook on everything, her perspective when there'd be tough situations, instead of looking at it in a negative light. It was always positive. It was, how can this, might be a challenge right now, but it's going to be a good thing, right? We look at how can we turn this negative into something positive. And she was ultimately probably one of the biggest mentors that impacted my leadership ability out there. I would have to give it back to Jennifer Reyes when I was working at Nationwide, just to give a shout out to her, because she was a big impact on my career when I was working for Nationwide.
Nice. Yeah. Having those people who can really show you how to stay positive and stay moving forward, even when things,
Yeah,
shit hits the fan. That is such
yeah, for
a
sure.
good influence to have on your life. So shout out to Jennifer. If you're out there listening, thanks for
Right.
helping Todd get to where he is today.
Cool.
All right. Second to last question. This is about finding deals. What's your favorite way to find good deals?
It's straight up just networking with brokers, because I mean, I love it. I know my wife gets annoyed by me. Like, I'm always talking to people. I'm always either on the phone, or like we'll be out somewhere and I'm like, oh hey, like we're at my daughter's basketball game, middle school basketball game. Guy sits down in front of us and he's like, hey Todd. And I'm like, I didn't really remember at first. I was like, oh my God, and we start talking about it. And he's like, hit me up. I might have a deal here or there. And actually, 3 weeks later, we got something through him, because I reconnected at a basketball game. But for me, it's just networking with brokers, it's other owners, property managers. It's the best way to get some potential off market leads towards stuff, and having those conversations and building relationships will ultimately pay off in the end.
Absolutely. Networking is so important. Every business is a relationship business, and real estate is no exception. So, networking is a great way to find good deals. Leading us to the very last question, and this is for the listeners. You've given us a lot of good advice. I'm sure people want to reach out, get in contact with you. What is the best way for them to do that?
Yeah, I'm on the social medias. I'm on Instagram or LinkedIn. You can find me at Todd Silance and LinkedIn. You can also reach out to me at email me, todd@summitcap.co, or visit our website there. And there's links to schedule a calendar if you want to get on a meeting. I love connecting with new investors or just people who have questions and want to talk, even if it's about fitness. Like, hey, I'm thinking about opening or buying a franchise. Give me a call first. I'll talk you through the pros and cons and make sure you're ready for purchasing a franchise.
Cool. I love it. All right. I will put those links in the show notes. So if y'all want to reach out to Todd, talk in real estate, talk fitness, whatever, whatever you want to talk about, I will
Right.
put that link in the show notes. Click a little more in the description. It'll pull down the full description, and in there you can find Todd's URLs. All right, man. That wraps it up. Thank you very much for hopping on the show.
Gabe, appreciate it, man. It's been great.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. And if you guys want to support the show, all we ask is you give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.